welcome to my YouTube channel again. In this video, as promised, I will talk about the logic behind my entries, the fourth chapter of my series Decoding the Algorithm. I already made the thread, but this is just a support video. So first read this thread and then you can go watch this video, okay? The thread is on my profile as always in highlights. You will find it really quick and easy. So let's go to the chart and let's talk about the logic behind my entries so you can understand real easy. So this is the chart, right? Here we have adrenaline liquidity. Imagine we are bullish, so this is the adrenaline liquidity. And price change the state of delivery from sell program to buy program here. Okay, this is the market. This is what price is doing every single day, every single session, from buy program to sell program to buy program every single time. Okay, so if I can go back here, okay, we will focus on the buy program. So from here, we change the state of delivery to sell program to buy program. Here is the last turtle soup or the last swing low of the sell program. So we don't want to go long here on the sell side of the curve. We want to go long only on the buy side of the curve. Why? The reason is because even we are bullish and we are right, we don't want to get into some drawdown. At least I don't want to get into some drawdown. I want to only press the long button and price goes straight to my adrenaline liquidity. In this case is here bullish. So I want to go long at least. I mean, this is difficult entry, an experienced entry, but the first one, second one, etc. What else I said? I divide the chart into quarters, into the low that has been created and changed the state of delivery, into my adrenaline liquidity. In these quarters, I want to go long. I want to trade only on the first one and on the last one. The logic behind is that here we will find the most optimal entries. Here it's really difficult to being some drawdown because, as I said, it's the most optimal entry. It's here, you see, it's always the best entries. It's really difficult to get into some drawdown. What happens if you are trading in the middle or halfway of the lever to the adrenaline liquidity? For instance, imagine here, well, we can go last Friday. This would be the most ideal entry. I will talk about the time-based entry model, but first of all, you have to understand the logic. So this is the adrenaline liquidity, and here is the high time frame, right? This is the high of 8 AM. This is the 9 AM open. Opens, highs, and displays lower. Why I want to only entry at the most optimal zone and the last quarter? The logic is really simple. we divide this into quarters. What happens if you go short halfway? Imagine here you see you get in FOMO in, price is going lower, 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 and you think, okay, I'm missing the move, I'm going short here. I mean, for instance, you are ICT pattern trader, whatever, this fair value gap. You say, okay, this is a short opportunity, you go short here, you get stopped out, and price reversed. Where is price going? Again to the first quarter of the move, another optimal entry zone. That's the reason, because I don't want to trade halfway into the my objective. So here, I mean, there's exceptions of course, but most of the times I don't like trading inside the 25% and 75% of the move, which is the other short opportunity to me. On the last quarter, we focus on the find a low time frame, right? In this case, look at this 5-minute candle going again to the last quarter. This acts like a real resistance, and in this case we are not looking for 2 or 3 hours, we are only looking for 1 hour. I think it's more than enough, and it's a free move that price is giving us. Most of the times, I would say 90% of the times, price will fail to complete the drawing liquidity. I mean, price is not going straight to the drawing liquidity like this. Boom, no. If we have a drawing liquidity, which is this one, before reach the level, price will fail most of the times, create a low time frame right in the last quarter, and this is our last long opportunity. In this case, this is the last short opportunity. So I don't know, where are you? Okay. Yeah, I was talking about I want to trade only the right side of the curve. If I'm bullish, this one. If I'm bearish, just invert, and it's exactly the same. We want to trade the sell side of the curve, but it's always the right curve. So the entries, the first one is always the most optimal entry, which is the turtle soup, which is this one. Second one is the candle that creates the swing low. We are still bullish, so it's the one that creates the swing low, which is the order block. I mean, it's not an order block, but it's how all of you know the concept. So it's that simple of the last candle that changes state of delivery. There are more entry, but I'm just talking about these ones. We can also find a low time frame rights if we are really close to the turtle subzone and the first quarter. Then we will find another low time frame rights halfway, but what could happen is that you go long here and price just come back lower, stop you out, and continues higher. And finally, in the last quarter, really close to the target. There you go. So our entry are here, first one, second one order block, third one low time frame right on the first quarter, and low time frame right on the last quarter. We can trade this one, yes, but maybe you don't know if price will make a deep retracement or not. Maybe you don't know yet the continuation model that I will release in October. I talked about this model a lot this week and previous week. Basically, the continuation model is as simple as, well, it's not the video that I will talk about it, but let's see that now we are bearish to change. It's that simple as this is the time-based entry model and this is the continuation model. As I said, price doesn't go straight like this. No. It creates these swings. You see, this small swing here, retracement, another retracement. This is another continuation model, exactly the same here. This is a time-based entry model. This is a continuation model. So only with these two models is enough to make a living trading. So for instance, let's go, I don't know, here this was a time-based entry model. Regarding New York, I talk about London most of the time because, as I said, I'm European and I trade every single day London session, and someday I trade New York, not vice versa. For instance, yesterday I was trading New York, so I went long. Well, actually it was here on you, but anyway, so the time-based entry model says we need a high time frame, right? Which is high time frame. It's not 4 hours. It could be 6 hours. It could be 12 hours. It could be 5 hours. For instance, this is also high time frame right of the previous candle. But we already know that in 4 hours, I said this in the, I don't know if it was in the first or second chapter. I think it was in the second chapter. If we divide the chart into 4-hour time frame, we will find that it's perfectly, this is London lunch, and this is New York. So you see here and here these candles, and this is also high time frame right. In this case, the high time frame right is at the same time the previous hour right, and we will focus on the first 15 minutes to create the high of the candle here at the beginning of 9 a.m. and here it's 9:15. You see how exactly the high was created at 9:15, not random. So next candle close above creates an engulfing candle of the previous one. By the way, we also have the low time frame right. So this is the most optimal entry. You cannot improve on that. There is no better entry than going short here. Are you agree, right? You cannot improve on that. Second entry is the order block. You want this candle to close below, and as soon as the next candle opens, we want to create the power 3. This is the wick, goes up. This is your short. So here was first one, second one here, and you see that on the first quarter we don't see any low time frame right. So we are not allowed to go short here. If you go short here, look at what happened. You got wrecked. I hate having stop loss. I don't have stop loss. I can avoid all of them, just following that simple reasons, that simple principles of price. So here comes back to the first quarter, and what happens? We have a low time frame right. So here is another short opportunity. I will talk about the stop loss placement. So continue with the price. Here is the liquidity. So in this case, the high of the hourly candle is already created. In this case, we can place our stop loss above the high. I don't look for these home runs. I look for 3 or 4 hours. In this case, I would place my stop loss here. The most optimal entry, which is the first one, because we don't have any reference about where we can place our stop loss. We just look blindly for 3 or 4 hours. In this case, looking for 4 hours. It will be here. It will never touch your stop loss if you are right. Second one is here is safe, but because of this is 10 hours. I never look for 10 hours. I would place my stop loss looking for 3 or 4 hours, exactly the same. Here is good. Second one, in this case we already know where is our high of the hour, so we can place our stop loss above and it's safe. In this case we are still looking for almost 4 hours. And the last entry was on the low time frame right on the last quarter, which is this one, and only look for 1 hour. So if you have seen the thread, every single entry is an exit. This means that here I went long here on you and I exit here. I didn't go short here, but if you go short here, where is your entry or your exit? It could be at the next here I think it was at 1 p.m. right? That prints a new candle. Yeah, here prints a new candle. So here is your optimal and exit point. Here. Here prints the 1 p.m. lower low, so here it could be your exit. In this case, the daily liquidity wasn't reached, so we can just wait to complete the daily liquidity and exit here. That's simple and stuff. So let's find another example so you will understand perfectly this model. For instance, we can go to London. Here we have the time-based entry model that happened on London. So this is 4 a.m. So we want to create the low of the 4 a.m. candle at the first 15 minutes after taking the 3 a.m. low. For the ones that are trading the silver bullet, good luck in your future, your trading career, but you have no idea about anything. What confluence we can add here? Let's go to you. You see that 4 a.m. fails to create the 4 a.m. low, so these divergence are SMT. To me, the 4 a.m. on you looks like this, and if you go now to 4 hour, you will see how beautiful is this candle, and this is your entry. But we were talking here on you. So, do we have a high time frame right? The high time frame right is this one. Do we have a previous hour right? Yes, it's this one. Where is our exit? We have two options. You can exit at 5 a.m. higher high, but what happened here? That the low was created at 4 a.m. So the 5 a.m. will be, of course, really close. It will be here. So if this is the first entry, the second entry is the order block. You are exiting here. The stop loss is below the low. So are you exiting at 5 a.m. higher high? No, it doesn't make any sense. The 5 a.m. higher high is here. It's not even 1 hour ratio, so it doesn't make any sense to me. So we want to divide the daily liquidity. You don't know the daily liquidity yet, but this was the daily liquidity. Oops. Just focus on highs and lows on higher time frame candles. For instance, I just said that we are bullish, right? So just focus on higher time frame candles. Look, for instance, this one, the orange one. You can go to higher time frames and look for candles. So this is draw on liquidities. You see the coincidence? This was my draw liquidity and this was my second draw liquidity. What happens after we take the last one? That price creates a high time frame right and reverse. But let's go back here. So here is your entry. You place your stop loss below, is safe. And what happened here? That price failed to complete the drawn liquidity. So this is just a retracement. It's never a reversal. Why we are not going long on the last quarter here? Because you have to also understand the logic of price and of the market. Watch always the weekly calendar. Here was Friday, we have red folded news. Sorry. So if we have red folded news at 8:30, we are not trading. I mean, that's a rule that I have, but I'm not talking about how I trade the news. But I'm not trade before the news, like 1 or 2 hours before. I wait as close as possible to the time of the news. Why? Because price what does is take everything out before. Let's say you see price was consolidating here, 8 a.m. opens here and goes below. Where stops? The 50% level acts like a real support, and this is also a long opportunity. And let's see where are we exiting our positions. We can exit here, we can exit here, or where I exit on you was at the 9 a.m. higher high. That, remember, every entry is an exit, every exit is an entry. You see, you cannot improve on that exit, you cannot improve on that entry, you cannot improve, well, you can improve that entry going long here, but it's not safe. But you see, zero drawdown every single time, zero drawdown if you go short here, zero drawdown if you go short on the order block. Okay, so let's find more case scenarios. I think it was one really clean. I don't know if it was on EU or GU. Here was also another time-based entry model. Here was continuation models. I think it was on EU. I mean, it's every single day the same. The market, it's code the same way every single day. So every single day you will find the same setups. For instance, we can go here. This is also a short that I took, and let's see the model. In this case is the time-based entry model. You see in 3 hours we took previous candle. If you go to 1 hour, you see that we took the previous hourly candle. This is the 3 a.m. taking 2 a.m. And if you go to lower time frame, you want to see a high time frame right, sorry, a low time frame right. This case you'll see really clean in 15 minutes. And you already know where I went short, right? You think you can improve on that entry? It's impossible. No one in the trading industry can improve on that entry. It's perfect. Where is your exit? We can exit if we are going counter trend. We exit on the very next candle. In this case, this was a 3 a.m. Entry, so we exit at 4 a.m. lower low. 4 a.m. happens here. My average stop loss placement is to 5 to 7 pips, so let's place 7 pips stop loss. Where is 4 a.m. open? Here. At 4 a.m. this is the 355 lower low, so as soon as we print a lower low, we exit the position. The reason is because we were bullish. If we are bearish, we can exit at next 5 a.m. lower low. Here 5 a.m. and then makes a retracement, reversal, whatever, or continuation, I don't care. That's the logic. So let's find our entries. First one, the most optimal one, you cannot improve on here on that entry here. Second one is the order block. We want the next candle to close below, makes an engulfing candle, and as soon as the next candle opens, goes again and touch the candle that has created the right, and we go short again. Our stop loss here is safe above here, otherwise we are wrong. By the way, I forgot to say that we want to create the high at the first 15 minutes of the candle. This case was at exactly 3:15 again. And our exit it's at next hour lower low. That's perfect. This happens every single day. If you don't believe me, just look at your charts, you'll see the magic. Let's go to the previous day. You see some similarity here on what happens on Friday. Look at the time that price reversed. Randomly at 9 a.m. Why? Because it's open a new high time frame candle. So high time frame candle, here's the right, which is exactly the same of the previous hour right. So we want to look for a low time frame right. Do you think you can improve on that entry? I don't think so. Where is your exit point? You can exit here, or if it's too much to hold the trade for 80 pips, which is to me actually, we can exit at next hourly candles while are printing lower lows. This is objective, this is simple, and this is what the algorithm does. Mitigates at least the low, and if here price wants to reverse, we don't care because we exit here. If price wants to reverse here, we don't care because we exit here. But because we are bearish in high time frame, we at least want to create this low, and then we don't care if price reverse continues. We don't care. You see, that was a perfect exit at the new high time frame candle. And here change the state of delivery from sell program to buy program. You should focus on what's happening here, what's happening here, what's happening here. And every entry is an exit. Every exit is an entry. So I was talking about this short here. And let's see how random. The price creates the high at the first 15 minutes of the hour. So here was your first and most optimal entry. The second one, you see this candle closes below the candle that creates the swing high, so it's an engulfing candle. As soon as the next candle opens, we go short again. In this case, because we are really close to the high, we can place our stop loss looking for 3 or 4 hours. In this case, I think 7 pips is good enough, and exit at the new lower low. It's 10 a.m. It's really close, so we wait for 11 a.m. to print lower low, so we exit here. Do you think you can make a living only trading like this? This is objective, this is simple, this happens every single day, and you don't know yet the continuation model, so be ready for that. So I think this is gonna be it. It's really simple, the logic behind. I mean, for instance, I don't know, we can go to every single day. Here, for instance, this happens at 2.5. So in this case, this is not the time-based entry model, but this is the continuation model at 3 a.m. This is the continuation model at 4 a.m. What is your exit? Time-based and exit. Here is the 4 a.m. higher high. What is the 5 a.m. creating or printing the higher high? Here, look at the reversal or the reaction after creating the higher high at 5 a.m. You see, at least price will mitigate the high and then maybe reverse on or continue, but we don't care because our exit is safe here. Actually, my longs were, I missed that long, but I went long here, I went long here, I went long here, and I went long here. Here was my exit. Okay, it's that simple. Here we had news at 10 a.m. Well, this is again, this is also a time-based entry model. Look at the time that the low was created. This is the end of 9 a.m. candle. What's the 9 a.m. candle doing? It's taking the I don't know if it was this pair that was taking this low. I mean, when the low of the candle happens at the end of the candle, to me, as you know, is already the next candle, which is 10 a.m. So the 10 a.m. candle to me looks like this. And you see that we have a previous candle right, and we exit when we create a higher high here. This never happened, but how we can anticipate this? Because at 10 a.m. we have news. So I said this multiple times, but focus on the weekly calendar. The weekly calendar is your friend. Don't listen to people that say, no, don't trade the red folded days, don't trade. You can blow your account, etc., etc. You think you will blow your account trading here, going long here, going short here, going long here. This is one of the most clean days of the month, and you will avoid this only because we have a red folded news. Really. Well, I think this is gonna be that I wanted to talk about in this video. Everything that I said, it's explained here, here on the thread. Let me see if I'm missing something, but yeah, I talked about trade only the right side of the curve. Here, focus on low time frame rights at the first quarter. Don't trade the left side of the curve. Here, the most optimal one. The second one is the order block. And the last one is the last quarter when we see a low time frame right. We avoid trading halfway because, yeah, I forgot end of the hour, except if we have a failure swing. If you don't know if we'll see a failure swing or not, just wait until the next candle to print. This is a really similar case that happened on Friday, this Friday. This was a continuation model, but you will understand here. So I was expecting the new 3 a.m. candle to create a higher high here, and I wanted to go short here on this candle. What happened? That the high was created at 258. So 258 is almost the next 5-minute candle, right? So the next candle it's 3 a.m., which is the new hour. So to me this looks like this. And when I saw the reaction, you see opens and with strong goes below, goes lower. So I went long halfway of this candle. And where was my exit? Well, actually my exit was here because of the underlying equity was here. This case was this one. That's the reason why I exit here. But where is the optimal exit? At 4 a.m. You see that this never happened, but I already talked about this, that GU made the lower low. So while GU creates the lower low and EU fell, we just GU is our trigger to exit this position. What else? Yeah, that's the reason. But in this case, it doesn't matter where are we going long, but you don't know if price will retrace or not. So it's risky to go long halfway of the move. Most optimal one here, this candle close above, so we can go long when this candle creates a pair of 3. You see that this never happened, so we wait, the price comes back to our order block. And on the last quarter, you see a low time frame right. You have to see this day. This is the last day of July of this month, of this year. You see in 15 minutes, this is a low time frame right, and finally exit. What else? Yeah, if you are trading ICT, you are fucked up. As simple as that. If you are trading these concepts, if you are trading more than this, which is time, highs and lows, underlying equity, and economic calendar, if you see a chart, you see this chart is clean right now, okay? What do we see here? We only see price, which is here. We see time, and we see candles. Do you see fair value gaps? No. If there are no fair value gaps, this doesn't exist. Do you think here the algorithm thought, okay, this is a fair value gap, you have to respect this? Close above, comes back. No, it's not respecting the fair value gap. The algorithm doesn't care about fair value gaps, it doesn't exist. The only that exist on the market are highs and lows, time and price. More than this is just noise. What we can add, the economic calendar. Knowing where the economic calendar will release, inject the news, it will inject volatility, so we know where we can trade. Why going long here? If we know that we are 1 hour left to the news, why not wait to the news? Why don't wait to the news to take a low if we want to continue bullish? This is another time-based entry model. In this case, it's not time-based on the first 15 minutes, but it's based to the economic calendar, so it's also time-based entry model. I never talked about this, but I think it's logical. I mean, if we have news at 8:30, we want to base our entry on the news, not on the not like here create the low at the first 15 minutes. So we want to take the previous hour low. In this case, the 7 a.m. low was taken. So 7 a.m. low is this, yes, is this one. And this is a high time frame, right? Let's go to 2 hours or not. I'm not sure if there's a time frame that takes this 6 hour sorry, well, whatever. It takes the 6 a.m. low and also, of course, take the 7 a.m. low. So what is our entry here? What is our exit? Based on price, sorry, based on time. What do you think? It's perfect. Yeah, I mean, if you base your entries with this, I feel for you. Here I'm not inventing anything, I'm just watching reversals in higher time frame. Failure swing here, failure swing here, here. I mean, it's every single time, it's exactly the same. You will see all of these patterns every single time that price reverse. Here again, we focus on the right side of the curve. This is the sell, the left side of the curve. Turtle sub was created here. Look at the time, it's perfect at the new 11 a.m. Open. First 15 minutes, in this case was exactly at the first candle of the hour. Creates what? Creates a low time frame right after the high time frame right. This is the order block. You see entry here, this is a low time frame right on the first quarter, entry here, etc. A stop loss placement, and next month be ready for the continuation model. Only with these two models, the one that I released, which is the 10 best entry model and continuation model, it's everything that happens on price. We can add more models. I have a lot of models, but I think with only these two models, you can make a living, you can retire yourself, and this is everything you need. Okay, so this is gonna be it for the support video regarding the entries. I hope you understand the logic behind it. It's really simple. And thank you for watching, and see you next one.